In today's video, I have a lot for you. We'll talk about Nvidia, the earnings, the market reaction, what's next. We'll talk about the path that Palantir took, going up and down the roller coaster, and what's next for Palantir. We'll talk about the Trump tariffs, the Salesforce miss, and also, of course, Tesla. What's going on with Tesla? What's the future of Tesla? Also, at the end of the video, I'll tell you why I removed a big, huge, massive Mag 7 stock from my top 25 stocks list, and I'll explain why I did it and why I think it has a lot of risk. Nobody's talking about that. A lot to come to today's video. Let's get started. I know everybody's talking about the Trump tariffs right now. The EU is being tariffed 25% allegedly. That's just an idea. He floated it. Whether that's real or not, with Trump, it's really hard to say. A lot of uncertainty. Now, when you introduce uncertainty to the stock market, it usually causes a negative reaction. It's not the first time we see it. Uncertainty means risk. Risk gets priced in. Stock markets drop. That's what you've seen over the past few days. Because people fear that the risk is going to manifest itself, and trade wars, which is going to get inflation up. Inflation going up means we might get to stagflation, means we might get to recession. So that's the fear. The track record of Donald Trump shows us that he is really, really good at bending but not breaking the stick, so to speak. So he's good with playing the game and being an agent of chaos, but to an extent. Right now, the markets have not collapsed, which means that the markets believe that the Donald Trump isn't going to break the market. It's going to stop at some point before it gets too late. And I tend to be in the same camp. I don't think he's an irrational player. I think he's going to use this to create leverage and then at some point stop, and then the markets will rally, and all the doubters that sold off are going to lose out on the massive explosion of profits. Let's call it this way. I was about to say something else. Now, again, with Trump, there's no certainty that that's going to happen, but that's what I think might happen. Now, if you like Donald Trump, dislike Donald Trump, it's irrelevant. My sentiments are irrelevant. The market doesn't care, and Trump doesn't care. Whatever happens, we have to analyze both scenarios without going into politics and our own personal preference. Now, you have to separate your emotions and what you feel about Donald Trump versus the reality of what might happen to the stock market.
So just tell me, after this earnings report, why aren't we seeing a bigger pop out of Nvidia? And in general, or do you think we're still seeing kind of a DeepSeek overhang on this company?
$39 billion of revenue, data center growth of insane proportions, not as fast, not as much as the last quarter, I get it, but still almost 100% growth in data center. The Q1 guidance is $43 billion, which is again above expectations. The demand is strong. $15 billion of free cash flow for this quarter, 80% year-over-year revenue growth. The stock price somehow after that remains flat, completely flat. That is weird. What's going on? What's happening? Well, here's the thing. You look at the stock price and you have to understand that despite all of these great numbers I just told you about, and even if you add some more fundamentals like the fact that margins still remain very, very strong at 70%. I told you in yesterday's video that Nvidia's margins are going to be the canary in the coal mine. The minute you see margin erosion of Nvidia, that's the minute you know competition is actually getting closer. At 70% gross margin, nobody's catching them. That is monopoly numbers. Again, Nvidia isn't going to do 150% revenue growth year over year forever. Obviously, that's never going to happen. At some point, they will slow down, but they will remain dominant. It's not Cisco. This isn't telecom. This isn't 1999. It isn't. Explaining you why is very, very simple. In telecom, the capex cycle, the investment in the infrastructure required to go from telephones to internet was a one-time thing. And then you have to kind of upgrade it along the years, but nothing major. It's telecom. It moves slow. In AI, the level of AI development and the compute required to push all these new models further and further, the cycles are never going to end. The H100, the H200, and then the H300, 400, 500. NVIDIA keep doing this like a money printer. They're not going away. However, although they will remain dominant, obviously, with the adoption of AI going through the roof, and this cycle is not even in its diapers yet, still, you have to understand that a lot of expectations were put on NVIDIA's shoulder for these earnings. People expected to be wowed. And just like Aswath Damodaran said in yesterday's video where I showed you guys that clip from CNBC and I told you, Aswath is saying they're going to beat across the board, but the stock isn't going to go through the roof because the expectations are not realistic. That's exactly what happened. Short term, the market wanted to be wowed. But at this point, Nvidia almost can't do anything at this point to wow people because they've already done it a million times before. Now, long term, no problem. Nvidia is going to be a monopoly in a very, very good market. No problems in Nvidia long term. Short-term volatility is fine. Nvidia just went through the roof. They need to come back down to earth a little bit, settle down before the next wave, which is going to come. Now, my end-of-year target for Nvidia is actually between $150 and $170 per share. So that's still very, very bullish in my opinion. I have a lot of faith in Jensen. I have a lot of faith in technology and in AI adoption. I think the CapEx story, the infrastructure story is far from over, and I also believe it's going to be cyclical and it's not going to end once this cycle ends. So my target 150 to 170 to end of year, extremely bullish. Now let's move on to Palantir. Now I get it, it's unpleasant to go from 80 to 120 back down to 90. It's painful. It's not pleasant for anybody. I'm not going to sugarcoat it and say it was fun. Obviously it's not fun, but you have to understand what's going on here in order to analyze this professionally, logically, and not emotionally. Look, the circus came to town, the circus left town. When the stock goes from 80 to 120 and then back to 90 in 3 weeks, obviously something not normal happened. A lot of the trash, the traders, the day traders, the opportunists, the speculants, the circus, it came to town, it took the stock from 80 to 120 in 2 weeks, and then they jump to the next thing or they jump ship. That's what they do. They're not long-term investors. They're opportunists. They came in, they enjoyed themselves, they made a nice profit, and they left. On to the next thing, right? That's fine. But the stock is still at $90 per share, and it's still up from the $24 that we had just a year ago. In 1 year, the stock went from $24 to $90. I don't think any of us can sit here and complain about the stock performance over the past year. It's all good. The stock is still up 20% of the last month, even after the drop. Now I get it. These traders came in, they made their 20%, 30%, whatever the case may be. It doesn't matter. I mean, they lose some, they win some, they get by. None of them will ever make 20x like we did on Palantir over the past 3 years. If we sit back and relax and enjoy ourselves and watch our performance versus the traders of the past few years, they're not even close, not even the same realm, okay? Now, look, institutional investors are still buying Palantir heavily. Look at the filings. Margins are still great. Profitability are still great. Now, the growth of revenue isn't slowing down. Don't tell me this BS about the Hexeth 8% cut in the defense spending. It has nothing to do with Palantir and AI. Even if it passes, commercial adoption is going through the roof, can't slow down. They just got added to the S&P 500. And that's why my price target for Palantir for the end of the year is 130 to 140 per share. I think they still have a lot of runway, but it's going to take time. It's going to take 8-9 months to get there. That's fine. I'm not interested in the day traders pumping my stock. They've done it before, taking us from 10 to 35, and then we dropped all the way to 6. They left. They came in. They did it again. They left. Good riddance. Let's move on to the next thing. Now, the Tesla story is driving a lot of investors insane. I'm getting a lot of questions about Tesla. Tom, what's going on with Tesla? What's up? I want you to use the same logic I just used on Palantir and apply it to the Tesla situation. Let's all be grown-ups here, okay? Now, whether you like Elon Musk, you hate Elon Musk, I don't care. It's a stock. Let's analyze it like grown-ups with no emotions, right? It's down a lot over the past month. It's down a lot over the past 5 days. Sentiment is in the toilet. I totally get it. So the first thing you do when that happens is you zoom out. Okay, let's zoom out for 1 year. I'm not telling you to go to the IPO. Let's zoom out 1 year ago. 1 year ago to right now, the stock is up 50%. Not too shabby. 50% in a single year for $1 trillion company? Not bad. Now, there's a lot of short-term panic. I get it. People talking about demand for EVs, for Tesla EVs coming down. Competition is coming for their lunch. I get it. Elon bad. Elon is distracted because of Doge. I totally understand these arguments and they carry a lot of water. It's just, I have a weird deja vu. When Elon took over Twitter, made it X, all the same people who are telling you now that he's been distracted were telling you, well, Twitter is going to distract Elon. He comes in, fires 80% of the people, stabilizes it, appoints a CEO, it's doing better than ever, and then the Tesla stock has done 50% since. So, learn some history. It's not the first time people doubt the level of multitasking that Elon can handle. No, not the first time and not the last time, but I'm not going to be one of them people. I think that he can do it. Now, long term, if you look at Tesla, from a logical perspective, a lot of upside. You got humanoid robotics, which is going to be huge. You've got the AI, FSD, full self-driving, autonomous driving, which they can sell to OEMs at 80% gross margin. I think they're monopolizing that as we speak. They don't even have a second place at this point. Some people have ran some models and some tests in cities here and there, Waymo this, Waymo that, London, Wave, whatever. Nobody has the miles that Tesla has to build a truly autonomous driving system, and I think they're going to be the first to do it. At that point, it's game over, right? We got the energy business growing 100% per year. Plus, they're still going to sell a lot of electric vehicles, even if competition comes from China. So it is volatile. It's going to continue to be volatile, but it still has a massive, massive opportunity to make a lot of money long term. In fact, I believe Tesla might be one of the best stocks to invest in right now, given the setup and given the negative sentiment. Now, a lot of things happened over the past few weeks that have scared people. And a lot of people talk about Tesla this, Tesla that. I get it. But at some point, you have to be a grown-up. Let's talk about Tesla long term. Elon bad, Elon good, and all that stuff. Let's put it to the sideline here, right? Tesla right now, to me, looks like a $500 to $550 stock by the end of the year, which is a very lucrative investment opportunity. Not even talking about long term. This is a $1,400, $1,500 stock over the next 3 years. So I'm very, very bullish on Tesla. Now, of course, we have to talk about CRM. CRM have basically pooped the bed. Whew, I haven't talked about that stock in a while. Made a video about them a couple years ago, said I was bullish. People made a lot of money on that video, but that's besides the point. They missed earnings slightly. They beat on EPS. They missed on revenue, and only 7.6% revenue growth year over year. That's very, very slow, slower than last year. Guidance miss, just shy of $10 billion for Q1. And they have a lot of competition breathing down their neck. They're still strong. Don't get me wrong. I'm not saying that they're over, they're finished. That's not what I'm saying. But I'm saying that they have an unclear AI strategy. Some AI strategy, but not clear how good it is and what it's going to do to the business. This growth, 7.6%, is not amazing, and lots of competition, which means that we're doing kind of this yellow flag. We're not ejecting anybody from the game. There's no verdict that CRM is finished, but this is a huge warning sign. This is red flag, and we have to acknowledge it. Now, as promised, I told you in the beginning of the video, I'll share with you one stock which I just removed from my top 25 stocks list. Now, on my Roik Academy page, there is a list of 25 top stocks at any given moment. Sometimes I'll remove a stock, sometimes I'll add a stock, and every time I do so, I post a deep dive about why I did it. Very lengthy deep dive. And this was no different. My Academy members have gotten the full scoop. And today, I'll give you the executive summary. And obviously, because it's a huge stock and a very popular stock, a lot of people would disagree with my choice, and I get it. But look at my track record. Not bragging, just pointing to facts. I've made mistakes, sure, but over the past few years, Palantir, Tesla, the 9 stocks I was bullish on in 2023, all the way to today, have made on average 300%. 8 out of 9 of them went up, 1 went down. I talked about HIMS and talked about a bunch of companies. My system of analyzing fundamentals and letting the market do its thing over the next 3, 4, 5 years is undefeated. Now, we may get a few of them wrong, but for the most part, if you buy good businesses and you hold them for a long time, you're going to do just fine. Now, with this particular stock, here's the thing. I have chosen to drop Google from my top 25 stocks list. And I'll explain why before everybody's head exploding. Right? They have a huge threat from AI LLMs. The search that we used to use back in the day is being disrupted and replaced by AI agents. And before you take my head off, think about it. How many times you went to ChatGPT instead of to Google search over the past year? The whole business of Google, the ads, is dependent on people using Google search, and that is being disrupted. On top of it, they have a huge competition coming up from Meta and TikTok, even on the video space of YouTube. And I'm a huge fan of what they're doing on YouTube. I get it, but it's being disrupted. Now, cloud, they're good. They're growing 30% per year, but they're not threatening the dominance of Amazon and Microsoft. I mean, they're good, but it's pretty much, stagnant. On top of that, they have regulatory issues which are still unresolved. Who knows how that figures itself out? So yes, they're still very, very, very strong. I'm not saying they're done, but there's a lot of uncertainty about this company. For example, what is their AI strategy? What is Google's AI strategy? I still don't understand that. They've tried something with Bard that kind of fell flat, and what next? So not sure what they've got. They're being disrupted all over the place, unclear AI strategy, a lot of regulatory issues. They're still a very, very strong company, very, very good company, and I think they can make it out. It's just there's a lot of uncertainty, a lot of risk, and now it means they're not a top 25 stock. They're still a great company, lots of potential. I believe they can make it, but at this juncture, given the other opportunities, they're not a top 25 stock. Doesn't mean they go down. In fact, I think they'll finish about 200 by the end of the year, and that's my official price target, but still not a top 25 stock. Now, I also want to talk to you a little bit today about what we do in the Academy. Now, we talk today about AI, we talk about Nvidia, we talk about Palantir, Tesla, Google, CRM, all these companies. Now, the reason I'm able to showcase my results of the past 2 years and my community's results, I can post screenshots of Academy members that made 200, 300, 400, 1,000% all day long here on the screen. It's never going to end. It's endless. Thousands of people have made generational money in my Academy. Why? Not because I give them stock picks, not because I tell them what to buy and what to sell. We don't have a buy alerts and sell alerts, none of this crap. We're disrupting the financial media. We're disrupting financial publishing. We're not going to hold you hostage like a junkie giving you fish. We're going to teach you how to fish so you can do it yourself. Even if it means you're going to leave after a year, it doesn't matter. After a month, the sooner the better. I have a lot of students that graduate and left, that's fine. Come into the Academy, patreon.com/Tom Nash. Join our 14,000 members, proven members that have done it before, and be a part of a winner team. Would love to see you there. Sunday is our next lesson. We also have 45 recorded lessons for you to watch the minute you join. I'll see you there. Peace.